Good morning, everybody. Welcome to today's webinar. My name is Kris. I'm the Operations Director here at Crystal Specialist Finance. And today I'm delighted to be joined by Gary Bailey, Managing Director at Hope Capital. Hi, Gary.
Morning, Kris.
How are you?
I'm good, thank you. You?
Yeah, very well, thank you. So today we'll be talking all things bridging, and we'll be looking in particular at the new development finance exit product that Hope have recently launched as well. We have a number of pre-registered questions that have come through, so thank you to all of you that have sent those in already. If you do have any other questions that come to mind during our conversation this morning, at the bottom of your screen, you'll see the Q&A button. So please submit anything through there. And of course, we'll do our very best to get those covered for you today as well. So Gary, for those of you that aren't familiar with you or your background, can you tell us a little bit about your background in the industry?
Yeah, sure. Thanks, Kris. Well, I've been in the industry now for some 30 years. So probably one of the longest established in the lending sector, at least. I spent 20 years as sales director at one of the largest providers in the specialist lending sector. I've covered everything from bridging to mortgages to buy-to-lets, commercial, semi-commercial, you name the range, and pretty much I was involved in it. And more recently, for the last almost 3 years now, I've been MD at Hope Capital.
Excellent. And Hope have recently celebrated 10 years as well, so congratulations.
Thank you. Yeah.
How busy are things there at the moment?
Well, I suppose the first thing, Kris, thanks for the 10 years. It's been great to celebrate it, and it probably shows the strength of Hope Capital now and the strong foundations that we're building success on today. Well, and over the last 12 months, we've hit a number of company records. We've increased the book fourfold, and in the past 6 months, we've virtually doubled the loan book and almost trebled the number of agreement in principles that we've been issuing, which continue to escalate monthly. So we're incredibly busy at the moment, and there doesn't seem any signs of slowing. Yeah,
very much so. So what are your company's current priorities then?
We've got lots going on, and it has to be around sustainable growth for us. That's got to be the main focus. We believe it's highly achievable as long as we continue to support and work closely with our broker partners. And I think we're in a good position in the market at the moment. When you look at reports on the bridging finance market, inquiries are at record levels. Lenders are reported to be increasing their book 7% on last year. So when you're comparing Hope Capital's results, I believe that we're outperforming the wider market. So we're obviously doing some good things, but obviously our focus has to be on growing the book, and one of our key values is going to be a key part of that, which is continuous improvement. So that's kind of, however good we are, we always want to continually improve in every aspect of our proposition. So, for example, we like to offer highly innovative, competitive products that is all built from the feedback of brokers like Crystal, and we continually enhance these products to meet customer needs. So, we'll continually review the service as well, and implement any enhancements that we need. So we've recently, the last few months, we've introduced electronic ID with Nevo, where you can do document transfer, and obviously it checks the ID electronically. Automated valuation models, title insurance, no solicitors undertakings, and all this is to speed up the process and cut down the upfront cost for customers. It makes cases simple and easier. So couple this with an approach to make deals and service excellence, we think we should be able to continue building it. So overall, it's the proposition to grow the book and work with our broker partners, to grow it with us.
Yeah, perfect. Some really nice values in there as well. And it is about that service that's key in the industry, isn't it? And absolutely. I think that's what sets certain companies apart from others, the fact that you get that approach when you deal with them.
Absolutely. Yeah, I agree with you, mate.
Yeah. Now I'm not going to use the C word, but we know that over the last year or so, it's been quite tempestuous out there in a difficult lending environment. Have you seen a change in what borrowers and brokers are expecting, what they're looking for from a bridging loan?
Typically what the brokers and customers key focus on, it's usually around a competitive rate, raising as much funds as possible and getting the loan delivered on time. And what we found is that brokers and clients are now need more innovative products than they've ever done, because every situation is quite unique in many instances. So You know, and what they're looking for is to provide that optimum balance between cash flow and affordability, whilst maximising the amount they get on day one and the capital they can raise. So the loan needs to be tailored to their personal circumstances. And with this in mind, we developed quite a unique affordability model that minimises the pre-lend costs, as well as providing a product that suits their affordability. So rather than a traditional model of seeing if customers' incoming and outgoings fit into a lender's model, you know, and then we've simply turned that on its head. So as a result, we can provide loans, as I mentioned before, AVMs, solicited upfront undertakings, title insurance, all that to reduce the pre-lend costs. And then the affordability model has been built so it meets the client's affordability. It means that loans are sustainable and the payments are sustainable for them, whilst providing as much as possible on day one in cash. So by ticking all of these boxes to the customer, we optimise the balance between cash flow and the day one lend for them. I think the other thing that we've seen as well, that's, you know, been a focus for customers, is the shift on loan size. And you know, it's certainly in the traditional kind of buy-to-let market, where brokers are more kind of clients are more concentrating on yield than ever before. So you know, the biggest yields are typically in the Midlands and up through the north, just as you probably recognise, Kris, as well at Crystal. So we introduced kind of a minimum loan from 50,000 to support this demand and, you know, and deliver for the customer, while still maintaining the maximum loan up to 5 million. So the changes we've seen are probably around people looking for increasing yields, as well as optimizing the cash flow and affordability and finding that balance. But the only way you can do that is you've got to have a product and an affordability model that works out what the client's affordability is and then matches the product to that affordability.
Yeah, affordability is an interesting one, because in bridging, most people tend to just look at, I don't know, retaining the interest, or it's all in the equity or something like that. So is that a different approach for yourselves?
No, you know, we still do a vast number of deducted bridging loans for obvious reasons.
Yeah.
But there are customers who like to find a balance between being able to service it at the same time as you know, being able to get the maximum out of the loan. So we kind of do the broad spectrum so that it suits everybody's needs. And I think that you know, we have some products that we brought into the market, kind of discounted rates from kind of 0.39% rates. That steps up after a period of time. And again, that's built for customers who want to make those payments. And additionally, we can spread payments if partially the loan is deducted and partly it is serviced, like a part and part bridge. We have a flexi product. That means the amount that the servicing can spread over the full 12 months rather than just start making payments in the 6 months. Again, that fits in with that affordability model to make sure that you know, we're providing the product they can sustain and it suits their needs. Every customer is different. It just depends what their demands and needs are at any particular point. So we try and build products that suit them.
Very interesting. And the other point you mentioned there was the tech side of it, with the electronic ID and the document submission, etc. Was that driven out of customer demands, I suppose, or was that more from an operational point of view that you were trying to make it as quick and easy as possible?
Yeah, well, I think a lot of the decisions we make are mainly around customer focus. You know, we do try and place ourselves in the seat of the customer and think, if we were the customer, how would we want this to work and how easy would we want it to be? So things like the electronic ID was born from that. Obviously, operationally, it's slicker, it's more efficient, it's more effective. We can push communications through that now as well to the client. They can have that on day one. Within minutes, they can have a signed application back into us and other supporting documentation that may be needed. So again, it's all about what would a customer want, and typically they want to get these things done as quickly as possible. So further on down the line, it saves still waiting for you know, the client to send in a number of documents 2 weeks later when it's all there waiting on the phone to be done. So things like that is customer focused, but naturally it's a win-win.
Yeah, definitely. I think that's one of the positive things that came out of the lockdown period. The fact that we're all looking now for ways to make that journey as easy as possible. And it's probably expedited some of these tech decisions that, you know, we probably all wanted to do, but we were looking at some point in the future, whereas that point is now, isn't it? And it's the perfect opportunity to launch them.
Yeah, and you mentioned about the C word and all the other stuff, but I think, it's created so many opportunities. And the good thing is people have embraced them right across the industry. Ourselves, obviously, have been part of that, but right across even solicitors have started to embrace things that they never did before. So, these are things that would have took years to come to the fore, but now we're in a good position with them all.
Yeah, excellent. So have you seen any change in demand for product types during the course of the year?
I think there's probably 4, 5, maybe 5 key purposes that have come through over the last year. One of them is refurbishment, and that's light refurbishment right through to heavy in refurbishment, and that's either for the client to kind of improve the yield or to provide capital gain. So we launched a range in January this year, which has been highly successful. The conversion of mixed use and commercial property to residential dwellings is another purpose, as properties still aren't being built quick enough to demand. So there's a great opportunity for developers in that space. Development, finish and exit has been a big piece for us. With recent events again, developments are overrunning due to supply issues and increased costs. So customers are looking for funds to finish the development and then provide them time to exit it and optimise the profit. And that kind of leads into development exit, which we touched on, where the developer has completed the project and simply needs to sell any remaining units to realise the profit or put the funds into the next venture. And I think that the other thing that's probably come to the fore is really yield, as I mentioned earlier, particularly in the holiday lets and HMO sectors, where customers can achieve some great yields on there now, and some exceeding kind of 20%. And I believe that this demand for these kind of 5 sectors are really going to continue well into 2022 and beyond, I think.
Yeah, I think the opportunity word that you use there is a key one, and we're certainly seeing now brokers identifying opportunities more. As a packager, we very rarely deal with the client direct. It's usually through the broker, so we're very much reliant on brokers identifying those opportunities when they're sitting with clients. And I think events like this are brilliant to give the broker that information and arm them with the tools they need, that when they're looking at a client, instead of it just being a problem, we can actually then focus on the solution and get the client from A to B. And again, as you mentioned, those opportunities there, the different outcomes that clients are looking for. I think lenders now are much more switched on to providing solutions for that, rather than just a couple of years ago it was almost just a homogenous bridging product that everyone's doing the same LTV and a similar rate, whereas now there's much more differentiation between lenders, which is brilliant to see.
Yeah, no, I agree with you absolutely, mate. I think it's becoming, the market's becoming more sophisticated, as it needs to be, because the world's changing, it's rapidly moving forward, and lenders need to respond to those demands and help brokers find those solutions. Absolutely agree with you. Yeah,
and it also therefore attracts I don't want to say a better quality of customer, but a different type of customer. I think sophisticated is the word there. We know we've had celebrities that have come to us for bridging. We've had really high net worth individuals that you look at the bank accounts and think, why do you need a bridge? But there are reasons that people need it, and it's almost now becoming much more of a mainstream product. Probably what I've seen.
Yeah, I absolutely agree with you. It's now. At one time, it was always a consideration product. I'm going back a few years now because obviously I've been in the industry for a while. But over the last certainly the last few years, you're seeing that's become a first choice solution for people, because brokers now recognise and actually, where does bridging finance fit in? At one time, it was all they need it quick. But it's far more sophisticated than that now, and there's great opportunities out there. It's now become a short-term lending vehicle to enable a bigger and better transaction moving forward. So yeah, it's definitely becoming a first choice solution more than ever before.
Yeah, and especially these days as well, with speed, again, the word you mentioned there, that's with the slowdown of transactions, solicitors still taking a while. We've seen land registry now taking months to register charges on properties. Bridging's a great stopgap to jump in or to solve a chain break or anything like that. So the typical uses of bridging are all still there. So yeah, it's really nice to see the industry becoming more professionalized and more sophisticated.
I agree with you 100%, sir.
So you've recently launched the development exit product that you've touched on, and also a finish and exit product as well. So both of these are a slightly new space for Hope. Can you tell us a little bit more about those products?
Yeah, so over the last year, how we viewed it was, development finance has played a crucial role in the specialist lending market. Investors and developers tend to rely on the development finance to fund the project. Whether that involves the cost of the building or renovating the property, there's many uses for it in that respect. But with the dual impact of Brexit and COVID, investing developers are eager to ensure their investment plans keep moving forward. They've been presented with increased labour supply issues, construction cost issues, and as it's been reported, as orders in this sector grew, at the fastest pace in 24 years. So they kind of naturally conflict with where it needs to go. And there's been record surge in the cost of timber, bricks and steel, some up to 80% increases, and a massive demand for concrete, resulting in the push up in the costs and extending building phases, as well as naturally the supply chain issues. So there's been a whole piece there that developers have had to suffer another challenge with. So when the sales do not happen as intended, exiting the development finance in time suddenly becomes under pressure, which can have a huge impact on the profitability of the development. So that's why we looked at, and we recently launched the development exit product, which offers up to 80% LTV, so that it allows that the development to complete it in time, and then allows further time to realise the sale of the residential units. This enables customers to clear their existing finance if they've got that, and also the potential of raising capital quickly for the next project, so they can move on to the next one rather than it all being tied up in this particular one. And as I said before, while it still allows them to more time to sell the units, which means they can maximise the profits. And that's why we kind of coupled that with the development exit, with the launch of the finish and exit bridging loan, which simply says what it does on a tin. It's there to finish up a project and then complete it, refurb it or develop it and then exit it. And that we launched with LTVs up to 75%, rates from just 0.7%. And loan sizes from 70 to 5 million, so it covers a massive sector of the market, whoever they are, and it just enables the borrowers to complete the residential developments on time, and again optimize the profit that's so essential for them. So both the development exit and the finish and exit have been well received, and provide a solution for customers to keep moving forward with the next venture, as well as realise the profits that they've worked so hard for so far.
Excellent. We've had a couple of questions coming live around this topic as well, so thank you for those, and please keep them coming in. So we've had one from an anonymous attendee that says different lenders have different stances on what they deem as light, medium or heavy refurb. Where do you stand at Hope on where those battle lines are drawn?
We're trying to keep it as simple as possible, really. So a light refurb is where there's kind of no structural works being done, and therefore you don't need a specialist surveyor or quantity surveyor or something like that to be involved. So usually it's it can be bathrooms, kitchens, windows, that type of thing, but there's no real structural works going on there. As soon as it gets into structural works, that's when we start looking at medium and heavy definitions, and naturally medium and heavy go into a little bit more of a grey area, because you could be doing a simple extension, or you could be building the same size property again on the side, which is slightly different to a medium. So we kind of that's how we differentiate them, really, between light and then medium to heavy.
Yeah, and I think it's a really important definition for brokers to understand the difference between bridging and development. They are very different products with very different requirements, and we run into a number of issues further down the line where people come to us because they've taken the wrong product.
Yes.
We had a deal last year, for example, where the deal was completed on a bridge. We were advising it should have gone on development finance. It was a complete restructure of a former pub that they're converting into apartments. It needed forward funding. There was a lot of the cash flow needed to be properly managed through the project. The client ended up taking a bridging loan on it. Obviously, a typical bridging loan, it's lent against the current value of the property. As it increases in value, you lend a bit more and you do the work that way. Or partway through the project, the client had taken up all the floors, taken out most of the internal support, so it was pretty much just a shell. The foundations are exposed. Ran out of cash, as you'd expect, went to the bridging lender to get a further advance, and the property had decreased in value.
Yeah, which it would.
Which it would do. And obviously that lender couldn't proceed, and the client's left in a bit of a pickle at that point. So it's really important that brokers get that bit right at the start, and it's not necessarily chasing the rate or chasing how much they can get. It's making sure that that product is the right product for the client.
Yeah, I agree with you. It is such an essential part of it, because that's where everything starts, isn't it? It's that initial fact find and get an understanding about what the deal is. We've had similar instances where people have set off on one project and then took a different direction, and we've had to try and help and support them through that to realise what they were trying to do. But I think there's a couple of things there that you mentioned, Kris. One was obviously you've got this kind of, I don't know if you can see this on screen, but like a J curve of what happens with valuation. So on day one, it's at this point. When they start ripping the property apart, it actually goes down before it goes up. So that's when it goes into the understanding of the experience of the client, the customer, what they've done before, and is this something, have they done other projects similar to this? Or for newly experienced individuals who want to step into the market, have they got contractors that are familiar with this kind of thing as well? And that's how we look at it. Our focus will naturally go back to the client and what their experience is, and we will lend to people who've had no experience, providing they've got the right contractors in place, and then we'll have a look at the contractors to make sure this is something that they're very familiar with and done several times over. And like you say, light and every refurbishment can go from a simple 2 up, 2 down to trying to refurb a block of like a pub or even an ex block of offices into residential units. So it's an understanding of where the experience like, because they're vastly different.
Yeah, very much so. You don't do straight up ground up development finance at Hope Capital, but you have got a good refurbishment range of products there as well, haven't you?
Yeah, absolutely. Yeah. So we can do all the heavy refurbish just out of the ground as we speak.
Yeah. Yeah. Excellent. So Amit, the question you've raised about development, the type of questions to ask, documents needed, etc. What we'd add there is basically it's just your normal fact find, get to understand the client, understand the project, work out what they're trying to do, and then pick up the phone, speak to our mortgage desk. We'll put you in touch with our development finance specialists, and then we can walk you through what kind of things you need to be looking for and what the client's looking to do. Where we've had a lot of success on this type of product or project, is with multiple products. So rather than just taking a development loan that sees you from purchase right the way through to sale, where it might be a bridge to purchase to get some land, we then switch to a different product once it's got planning that we can then start doing some works. And then as Gary's touching on there, the development exit or the finishing exit afterwards. So instead of taking one rate all the way through, with multiple products, it can kind of adjust that rate curve on the way, which that tends to work really well.
Yeah, I agree with that, Kris, because there's not one size fits all in that particular sector, is there? So, for example, we do a lot of purchases where they're looking for the planning gain, or they've got the planning gain, but they haven't got the development finance in place, things like that. So we'll do the purchase, no works are done. Then they'll refinance us onto development finance, and the intention then would be they could end up potentially coming back to us on a finishing exit or a dead exit. For that particular purpose. So yeah, there's not always one vehicle that suits everything, but one of the things we're looking at. Yeah,
and that works really well from a cost point of view, because the rates can fluctuate at different points. So when it's a heavy refurb, it's more expensive than when it's a light refurb, for example. So the value of a broker in that transaction is it can't be underestimated, really, because a client might think it's one thing, whereas the broker will understand the whole market and find all of those solutions to it. It's certainly something that you should be discussing with your clients, and something that you should then be taking some extra help from specialist packages such as ourselves, and obviously we can put you in touch with the guys at Hope and get the deal moving for you from there.
Yeah, great.
So talking about expanding ranges and looking for other opportunities, we can see from the banner behind you there that you've recently revamped your proposition for Scotland.
We recognised that certain sector of the Scottish property market were underserved, to be honest. So we enhanced our product range to meet some of these needs. So we will do up to £5 million now in Scotland. LTVs up to 75% can be considered. We've reduced the rates by up to 26%. So that bit of an early Black Friday offering on that. The loan can be used for almost any purpose, including refurbishments and change of use, that type of thing. Rates are from 0.7% as a standard rate, but we also offer our discounted products in Scotland now, which are from 0.39. So the Scottish range, we believe, is a great opportunity for the brokers and customers alike to provide, affordable solutions for residential, mixed use, commercial, and even we'll even look at land, in this underserved market, which Scotland often is, unfortunately. But that's why we're trying to build a proposition that can be successful up there.
Yeah, excellent. How's that relaunch gone for you?
It's gone really well, really well. We attended a seminar up there as well. We had huge interest in it, and just the inquiries that are coming through. There's definitely an appetite to lend up there, and certainly there's a demand for it up there. Because as I say, I think it's just been underserved, and it's been difficult for brokers in that particular market to try and find lenders with an appetite to lend at the levels they need to.
Excellent. And are there any other new products we can expect from you before the end of the year?
Oh, well, as you know, Kris, we've launched a few products this year, and we've certainly had a range of 70s. We've done our 70s collection, our 80s collection. We've done the light to heavy refurb. We've now done the dev exit, the finishing exits, and in between we've launched things like the Lions product, which is a fast track product to get deals through quickly with little to no upfront fee costs and things like that. So we've done a lot in 2021, but that doesn't mean we're going to sit on our laurels. We've had they've been a huge success, and that's been part of the notable accomplishments that we've managed to achieve this year. So we're working on quite a few things at the moment. For me and for our business, it's all about timing and making sure that what we do launch is at the right time for that particular market, which we keep a very close eye on. So yeah, we have things in the pipeline, but timing's going to be whether we launch it and when we launch it. So watch this space, Kris.
Yeah, so I'm not going to tease anything out of you on there then. Brilliant. And you mentioned timing, so congratulations on your award win the other night as well with the marketing campaign.
Fantastic. Yeah, it was a great win. It's lovely always to pick an award up in recognition for the team and the hard work they put in. And the marketing campaign's been fantastic and just laid the foundations for our sales teams to bring in the business, and then the underwriting teams to show what a great service that they can provide, and the collaboration that they can put in place there. So yeah, it was great to win the marketing award, but there's a whole team behind that to make it work, which has been fantastic.
Yeah, excellent. Well said. And how do you see the short-term market playing out into next year then? Just getting your crystal ball out for a second.
Oh, it's always hard, the crystal ball. We've all learned with this over the last few years, haven't we? Yeah. Look, I think competitions will remain strong, both in product and service offerings, and all that will obviously benefit the customer. I think the lenders that will be winners will be those who invest in their overall proposition, monitoring and responding quickly to the trends, demands of the market and the customers. And for brokers, the winners will be those that embrace opportunities that bridging finance can provide. I read a report recently where only 15 to 20% of brokers have actually engaged with bridging finance. So that means there's over 80% of brokers out there missing some real opportunities. And those who do embrace it and diversify the business, either doing the business directly with lenders that they can do, or utilising the skills and experience of brokers such as Crystal, can only provide a better service to the customer. It increases their own revenues, but also adds a whole strength to their business and their customer proposition. So if there's anything I could say to brokers out there who aren't utilising bridging finance, it's a massive opportunity and you should really embrace it. I think the other thing which I think will probably continue into 22 is what I mentioned earlier, really, which goes beyond your traditional buy-to-let investment market, because we have seen really healthy competition in refurbishment finance, conversions of mixed-use commercial property to resi, development, finish and exits, development exits. And I think there'll be more on the holiday let and HMO market as well. And as I say, all great opportunities. And if brokers feel that it will distract them from their core proposition, they've got a great opportunity to use specialist brokers such as yourselves at Crystal.
Yeah, well said. And I think bridging is one of those products that you'll very rarely get a client walk into your office and say, I need a bridge. The client will come in and say, I've got a problem, or how do I get from here to here? And that's where bridging really, it's an opportunity to solve a problem rather than being a product of first choice a lot of the time. But when you see that problem, then bridging should be the first option that you look at for that, because it can solve a lot of problems.
Yeah, usually, as a very rough rule of thumb, if a client needs money for a short term to be able to enable something else to happen, bridging finance is probably the best solution for them in most instances. So, like you say, it's just recognise that. But customers tend just to come and they'll ask for a product in many instances. I've seen it over the years for brokers when they don't actually know what they're asking for. Really, what they're asking for is they need some money to do this, but they don't necessarily know what the solution is. And that's where brokers, savvy brokers will look at it and understand what the needs are and then come up with the right solution.
And linked to that, we've had another live question coming in. Do you have any limitations on what the use of funds can be for a bridge?
Pretty much not really. As long as it's a legal purpose and there's a strong exit in place. I think the key for bridging, which some people may not always pick up on, is it's not the lending of the money and the amount that's lent on day one and the rates and everything else. Part of it, a big piece of it, is the exit at the back end, how strong that exit is, and how feasible or how viable the exit will be to make sure that they clear it in time. So yeah, that would be my advice. It's mainly about the exit and make sure that there's a strong exit in place, regardless of what the purpose is generally.
A good answer. And how important do you think it is to be providing low rates in the current market?
It's a good question. It's one that's been hotly debated on several occasions, this one, on and off over the years.
Yeah.
Low rates in the market are typically driven by an oversupply of commodities, whatever market you're in, really. So over the past couple of years, the perfect storm has been created with the impact of COVID and Brexit, meaning that most lenders have an oversupply of funds which they need to get out into the market. So, some bridging finance lenders, with it being such a competitive space, that they're looking and concentrating on offering low rates, which is naturally beneficial for the customer, which is great. Others concentrate on the service and make sure that, because they may not be able to challenge on rate, because it's not the lowest rate, so they look to excel in that service space. But there's lots of other factors that, from a broker perspective, they need to look at rather than just a low rate in the bridging finance market. And these are things what the client's needs are, what the exit's going to be. We've already been asked the question about what the purpose would be. Some lenders won't lend on certain aspects, and there may be some unconsidered additional costs and management fees that are charged throughout the loan, which aren't shown in the rate. And then the consideration of whether the loan meets the customer's affordability, which we touched on before, and what their funding needs are. And one of the big things again, which is important in this market space, is the speed, the efficiency of the lender, and delivering it on time, because everything else, if it's not delivered on time, just goes by the wayside. So there's lots of things that brokers need to take into account, when they're placing it along with the lender. So competitive rates are naturally part of the overall proposition, but savvy brokers are looking at lender support their clients, where they can provide that transparent and innovative product which matches exactly what the customer's needs and affordability and can deliver on time. Simply, they look at the overall proposition to deliver the right customer outcome, not just the rate.
Exactly that. The scenario that I described earlier with the pub refurbishment, that was purely done on rate chasing. And the rate was probably cheaper than you'd get on development finance, but it didn't suit the client's requirements at all. So it's, people think that because it might be a non-regulated product, or it's on a buy-to-let or something like that, that there might be it's less, I suppose, less requirements on the broker. Far from it. It's all about do exactly the same as you would do normally, understand the client's requirements, work through the features that the products offer, and make sure that really matches with what your client's looking to do. Yeah,
agree. Absolutely.
One of the, I heard a lender a few years ago say that it's really easy to lend money. Anyone can lend money. It's getting it back that's the problem. So it's about making sure that the deal that you're doing is absolutely spot on to get from there.
Absolutely. It goes back to the exit, that one, Kris, doesn't it?
100%. 100%. And then speed, we had a couple of questions coming live while we've been talking through that one. Clients looking to purchase their first property at auction, that they just want to flip to take the equity to fund the next deal. So they might want some funds for renovation on that as well. Sounds like a typical bridging scenario for that. dependent on figures and equity and how much cash is available. I'm sure that's a deal you'd like to take a look at, Gary.
Oh, absolutely, yeah. It's that they're kind of the nicer ones. The great things about the auction purchases is that that whatever they're purchasing it for, someone else in the room has probably offered £1,000 or £2,000 less, so you've got more confidence in what the valuation is on at that particular stage. We could do the initial purchase, and then depending what kind of refurb they need to do, we could do stage payments depending if it's light or heavy, to refurbish it through. They can get the uplift, they can sell it, and the funds can go straight into the next purchase, and so on and so forth. So they're kind of the nice vanilla cherry deals that we all like dealing with, aren't they, Kris? Those
definitely, yeah. And it mentions in there that the client's also got existing properties in the background. So I think a lot of the time there are opportunities to pull equity out of other properties as well to increase that initial day one lend.
Absolutely, and I think that's part of that fact find again. Is it isn't all about the property that they've got on the table as such. It's sometimes it's how you construct the deal, and people like yourselves are well capable and understanding of how you can look at the wider kind of assets and liability statement, see what other properties are there, and where there's opportunities to release more equity to help either for the refurb of the property or even to do the initial purchase. It's a great start. We have rates coming from 0.7 on those types of deals. So love to see that one, however it may be constructed.
Yeah, perfect. And again, it's a really good point there, looking at the background assets and liabilities as well, because purchasing a plot of land might get you a certain LTV at a certain rate, but if there's an unencumbered buy-to-let property in the background, a capital raise against that might be a cheaper solution for the client and provide more funds on day one than the other option was looking at there. So it's about offering that holistic service. Just because it's a bridge doesn't mean that we do less. If anything, we do more than you do with a standard residential mortgage, where you can build that relationship with the client, solve the problems, and then that client will come back time and time again. Key thing as Gary touched on, the key thing with a bridge is the exit. So therefore, if you're providing the exit mortgage as well, you've got a second chance to earn on that same transaction. So it's a long-standing relationship that you're building with the clients, and hopefully that will generate more business for everyone off the back of it as well.
Absolutely. Again, I think when you know this well, Kris, is when you're looking at the lender you're placing the loan with. There may be cheaper rates out there, but they may not be able to offer and take into account the other assets, because they may only, say, for example, lend on residential properties, where they may, in their portfolio, the client may have mixed use, they may have commercial, they may have a bit of land. So you need a lender that can lend across the whole spectrum to help them in that particular space. So it goes back to the question around, is lowest rate always best? I'd say not. It's all about the bigger picture and putting it's almost putting a jigsaw together and making sure all the little pieces fit appropriately, and you're not trying to slam them into place.
Exactly that. And that's something brokers will be familiar with from the residential side of it, where you take into account that wider suitability piece.
Yeah, agree with you.
I see you've got a bit of a background in second charges as well. So this is something it's common to the industry, isn't it? It's about looking at that proper solution rather than just what's in front of you.
Absolutely right. Which again is an underserved sector of the market. I think there's massive opportunity in the second charge market.
Yeah. One of the strengths of Hope Capital has always been your people. And I can see that you've had many new hires in recent weeks. Can you tell us a bit more about your growth and any future plans there?
Yeah, certainly. We've brought some great people to the team, very talented, who immediately added value for us. And these new hires naturally tie into our growth plans. We like to forecast where our volumes will be in the next few months and years, and then we like to make sure that we bring in people at the right time to make sure that the quality's there, they're trained well, and we're ready for that next phase of growth. You'll have seen it yourself and will have experienced it, because many lenders have done it in the past, but often they allow the volumes to increase and then try and recruit. Well, what happens, unfortunately, is naturally the service wobbles for a period until those people get up to speed that they brought into the business. We try and plan that through really well, because we're aiming at sustainable growth. So we try and plan it as best we can, make sure that they're in and are trained, for when the volumes hit, basically. So we're always looking for talented individuals to work with us who want to join an exciting company, a growing team who can add value, who want to be valued and developed, and the success, will contribute directly to Oak Capital's success, because every colleague here plays such a big part, as they do at Crystal, as I know, in ensuring that every broker and borrower receives an excellent service, whatever the needs. So as we speak, we're looking at positions right across the company to further strengthen that team and for ready for the growth. So, there'll be more new hires coming soon, but we're delighted with the people that we've brought on board recently.
And culture is such an important thing, isn't it? You can have the best CV in the world, but that person needs to fit within the business. And again, I know the values of Hope there, and it is a nice family feel to the business, and everyone adds their own strengths and brings their own experience to it. So getting those people right is essential, as you say.
Yeah, I agree with it, and I think obviously Crystal I know well, and I see that natural cultural fit, as between broker and lender as well in that respect, because we're very, very similar in that respect. But when I think everybody, probably every participant on today, they will have looked in the past at recruiting people, and there's many people can do the role and will do a great job at the role, but culturally it makes such a big difference if you can get them to fit as well as be able to do the role, because I think that's where the success of the business then lies. Yeah,
it is, and people deal with people, don't they? So people use Hope because you've got great products, great service, and there are good people behind that as well that you can pick up the phone and talk to if there's anything there.
Yeah, they're the essential part of it, to be absolutely crisp. Beyond that, all we've got is a set of plans and a pot of money in a nice way. So people are such a vital part of it. Yeah,
definitely. So what does the future look like for Hope Capital?
Well, I think it looks really bright, to be honest with you, Kris. Obviously, as I mentioned at the beginning of this conversation, we've had some great results over the last 12 months. As I say, we've fourfolded the booking numbers. We've got a great team that's achieved these records, and we feel confident moving forward. It's only going to go better into 2022. You look at the market, bridging finance, as we said before, continues to evolve as a first choice solution. There's an increase in demand for it. The appetite for bridging loans has increased, and we aim to remain at the forefront of innovation to help lead the market. And to do that, we've got to respond quickly to the needs and demands, and implement whatever is required to support the customer journey. So we'll keep our focus in those spaces. And this approach simply gives us great confidence in what the future looks like. We plan the growth. So we're really looking forward to 22 and beyond. And working with the likes of yourselves and other brokers to take us to those extra levels for all of us, so that we all mutually benefit.
Brilliant. That's been really informative and really interesting conversation there, Gary. So thank you for that. Thank you to you guys for the questions that have been coming in as well, which hopefully we've managed to cover most of them on the call today. Obviously, if there are any we haven't picked up, we will talk to you separately about those. And rest assured, if you've put a deal in there that we can take a look at, we'll be straight on the phone to talk to you about that as well. But if you do want any further information about Hope's products or about anything that we've discussed in the webinar today, please let us know, and we'll make sure we can get that across. Gary, really useful. Thank you so much for your time this morning.
Thank you. Thanks, Kris. It's been a delight coming on, and hopefully it's been useful for some people.
Yeah, excellent. So all that's left for me then is thank you to everyone for attending. We'll get the CPD certificates out shortly, and please feel free to speak to us if you've got any cases that you want us to take a look at. Excellent. Well, thank you all for your time, and see you all again soon.
Thank you.